Hey there, tech enthusiasts! Welcome back to EC Researcher. Today we're unraveling a key topic in the world of blockchain technology. Its four main types. Did you know not all blockchains are created equal? Each type, public, private, consortium, and hybrid, serves a unique purpose and has its own pros and cons. By the end of this video, you'll not only understand these types but also know where and how they're used in real life. So grab a coffee, get comfortable, and let's dive into the amazing world of blockchain. Let's start with a quick refresher. Blockchain is a digital ledger, a sort of notebook shared across a network. Every time a transaction happens, it's recorded in a block. These blocks are connected in a chain, and once added, the data cannot be changed or deleted. It's secure, decentralized, and transparent, making it a game changer in industries like finance, healthcare, and more. Now let's move to the exciting part: understanding its four types. First, we have the public blockchain, the one most people know about. What is it? A public blockchain is open to everyone. Anyone can join, verify transactions, and even become a miner. It's completely decentralized and doesn't rely on a central authority. Examples: Bitcoin, the first ever cryptocurrency enabling peer-to-peer digital payments. Example: you can send Bitcoin to someone across the globe without needing a bank or middleman. Ethereum, the backbone of DeFi, decentralized finance, and dApps, decentralized apps. Example: platforms like Uniswap and OpenSea run on Ethereum's public blockchain. Why it's awesome: complete transparency, everyone can see what's happening. Decentralized, so no single entity is in charge. Fosters global innovation by being permissionless. But it's slower compared to private blockchains. Energy consumption is high, especially in systems using proof of work. Next, let's talk about private blockchain, the polar opposite of public blockchain. What is it? Think of it as an exclusive club. Only approved members can join and access the network. It's usually controlled by a single organization and focuses on privacy and efficiency. Examples: Hyperledger Fabric, used by companies like Walmart to track food safety. Example: Walmart can trace a mango's journey from the farm to your grocery store shelf. Corda, a blockchain designed for banks and financial institutions. Example: banks use Corda to settle payments faster and more securely. Why it's great: super fast transactions because there are fewer participants. High privacy, perfect for sensitive data. Easier compliance with regulations. But the downside? It's not as transparent. Centralized control means trust depends on the organization managing it. Moving on to the consortium blockchain, also called the federated blockchain. What is it? Here, a group of organizations works together to manage the network. It's partially decentralized, combining the security of private blockchains with the collaboration of public ones. Examples: R3, Corda, used by global banks for secure data sharing. Example: interbank payments can happen quickly and securely without manual reconciliations. Energy Web blockchain, used to manage renewable energy trading. Example: companies track and trade clean energy efficiently. Why it's a win: perfect for industries where trust among multiple players is essential. Faster than public blockchains. Balances transparency and control. Challenges: governance can be tricky as multiple organizations need to agree on decisions. Transparency is limited compared to public blockchains. Finally, let's talk about the most versatile type: hybrid blockchain. What is it? As the name suggests, it combines the best features of public and private blockchains. Sensitive data stays private, while general information is public. Examples: Dragon Chain, used in retail and healthcare. Example: patient data remains private, but anonymized data can be shared for research. Zinfin, a blockchain for trade finance. Example: businesses can privately store transaction data while still ensuring public trust. Why hybrid shines: perfect balance of transparency and privacy. Scalable and efficient for complex real-world use cases. Challenges: more complex to design and manage. Let's wrap it up with a quick comparison. Type: access control best for public blockchain. Open to everyone, fully decentralized cryptocurrencies. dApps, private blockchain restricted invitation. Centralized enterprise systems. Supply chains consortium. Blockchain shared among a group, partially decentralized banking. Energy trading. Hybrid. Blockchain controlled. Mix, combination of both healthcare, retail systems. Each type serves a unique purpose depending on the need for transparency, privacy, or collaboration. So there you have it, the 4 types of blockchain simplified for you. Want transparency? Go with public blockchain. Need privacy? Choose private blockchain. Working in a group? Consortium blockchain has your back. Need a mix? Hybrid blockchain is the ultimate solution. Which one did you find the most fascinating? Let me know in the comments below. And don't forget to like, share, and subscribe to ESA Researcher. Let's continue exploring technology together, one video at a time. See you in the next video, and as always, stay curious and innovative.